when you moved from credit risk to market risk, was it very
Mhm.
challenging for you? Because was industry willing to understand that okay, somebody's coming from the credit risk, he might not know market risk. So
I got to work a bit on the market side as well while I was still within the credit risk team. So
now, when we talk about market risk, so if for our students, for our candidates, if you can explain them in a very simple language, what does a market risk team do?
generally, I kind of work on market risk analytics, analyzing changes in the risk metrics that we have set and the limit monitorings. You're preparing the reports to the senior management, sometimes for the regulators as well.
In the market risk space, do you generally find engineers being there more in those roles?
It depends, but I see at least a good number of people coming from math background.
What is the key essential skill to succeed in market risk? Hello, guys. I hope everybody is doing good. Hi, this is Ganesh Nayak, a health finance professional and students to excel in their career and become a better version of themselves. And I also help students who are preparing for competitive exams in finance like CFA, FRM, ACC, and SCR. And today I have with me one of the expert in the market risk domain, Sagar, and he's going to be talking about his journey of being into the industry, what it takes to be into the market risk side, and what are the skill set or what are new things that are happening in that domain. And the purpose of doing this podcast is basically to help the audience or the candidates who are planning to enter into finance or they want to make a career into finance, their life should become easy by trying to understand what is there in the different roles. So, Sagar, first of all, thank you very much for taking out time and talking to us. And
Thank you so much, Ganesh.
for the audience, if you can give a brief in terms of your experience in the industry.
Okay. First of all, thank you so much, Ganesh, for inviting me. I'm very happy to be a part of this podcast. So I started out as an assistant manager with a commercial bank in India back in 2017. Very soon, I transitioned into a risk manager role within the same organization, where I initially, for a year or so, handled credit risk. But over time, I found myself naturally drawn towards market risk. It felt more fast paced, closer to the markets, and a lot more dynamic, especially with the interaction you have with the trading desks, the risk modelers, and the decision makers. So
Okay.
what really resonated with me was the idea of measuring and managing financial risk in a structured and model driven way. And the market risk also felt like the perfect balance between technical modeling and staying connected with the financial markets. That was always my interests. So later I moved into a market risk role at a global bank, and now I'm with one of the world's largest reinsurers. And so I've had a chance to see the full spectrum, I would say, from a domestic Indian bank to a large global player, and now the scale and the complexity of a reinsurance giant. So that's a bit of my journey.
Wonderful, Sagar. So you mentioned that from the in the commercial bank that you were working, you moved to the risk team. That
Yes.
happened post your FRM.
That's right. That's right. Yes.
Okay.
Post my FRM level one, I kind of made a request, and of course, there were a series of interviews, and then I was
Right.
observed into risk management. Yes, but that was
Okay.
post FRM level one.
Okay. And you initially joined into the credit risk space, right? So
Yes, that yes. Mhm.
what all roles or what all teams are there generally in a credit risk in an Indian bank?
Okay. So, as a credit risk, the major within the Indian bank setup, it looks something like where you have credit approvals. There are certain level of approvals that a risk department should give before you lend out money. So, of course, there are different levels of I would say limits that are set at
Okay.
a regional level, at a branch level, and at a head office levels, right? So I was sitting in head office, so only the loans that were of a certain quantum would come and qualify for a risk management review. Otherwise, it would be taken care at a much lower level, such as regional level or some smaller loans at a branch level itself. But overall, in the credit risk space, your major role would be to rate. If it's an individual or an entity, you would rate the entity based on the type of business activity they are involved in. There are multiple credit risk rating models we had, and we were rating each of these entities. That's internal rating. Of course, we would also take external ratings from institutes like CRISIL and Moody's, wherever the ratings were available. We would combine these and then finally give our rating and our commentaries and what kind of approvals we can go ahead with such a risk, given our risk policies.
Okay. Now, when you move from credit risk to market risk, was it very
Mhm.
challenging for you? Because was industry willing to understand that okay, somebody's coming from the credit risk, he might not know market risk. So, likewise.
Mhm. So one of the things that I also got as an opportunity, I would say, was that I got to work a bit on the market side as well while I was still within the credit risk team. So I would speak to people in the who were handling more of a market risk roles and understand what they were doing. And in fact, I would also had an opportunity to cover for one of the colleague who was away for some time, and some of the things more like a knowledge transfer which I had, I could work. I got a very initial exposure of war monitoring, the limit monitorings, and how the certain reports are to be done, what kind of things are to be commented, and things like that. Kind of gave me a bit of introduction to the role, and I had a very broad idea, but really not in detail. To answer your question, yes, it was a little difficult initially, but also it comes with a lot of preparation and what your interest lies in. So I always prepared myself for these roles. Understand the risk metrics that are in the market risk space. You learn the skills that are really required for the role. So I think that is what helped me initially.
Okay, interesting. Now, when we talk about market risk, so if for our students, for our candidates, if you can explain them in a very simple language, what does a market risk team do, and within market risk, generally, what other sub teams are available?
Okay. Maybe I can talk about a bit on like how a typical day looks like.
Okay.
Generally, I kind of work on market risk analytics, analyzing changes in the risk metrics that we have set and the limit monitorings. You're preparing the reports to the senior management, sometimes for the regulators as well. Also, the big part of the role involves stress testing, both for internal risk reviews and for regulatory requirements. So
Okay.
there's also quite a bit of coding that's involved, mostly in Python or R. So whether it's running a scenario analysis or building risk dashboards that are required for the team, and even sometimes automating the recurring reports that we have. Of course, there are other things that sometimes you need to connect with the traders, asset management teams, and you speak with other risk teams to dig into any unusual market movements to try and understand what's driving them. So that's on the work side. But to answer your question on what other teams you generally have, you have risk modeling teams who generally model the risk, and then you also have risk model validation teams. So they also sit together in a way. These models are developed by the risk modeling team, and of course it has to be validated by a different set of people, and that's where you have a risk modeling team. And then you have risk analysts who sit at the juncture of all of this, where you monitor day to day risk movements, you analyze the changes, you understand why such changes are happening, what exposures came in, what went out, caused these kind of risk drivers, and then you comment. You also have a daily reports. We set up limits, and we also monitor these limits on a daily basis. Of course, there are more frequent reports, but there are also some less frequent reports, such as weekly, such as quarterly reports as well. So that's a bit on
Okay.
teams.
Okay. And you also did CQF. So
Yes.
when did this happen, and what was the trigger point for you to do that certification?
So basically, if you see, once you do FRM, you'll understand a lot of conceptual understanding is what we get when we do FRM. And it also has a good amount of practical knowledge within the syllabus, but still, for you to go and try something, let's say code up something or see it practically, you need to have another step of understanding where you understand the math behind it in a much more deeper level. So how I see FRM and CQF is they both complement each other, of course, but it's the right way to do is do FRM first. You understand the theoretical concepts. Of course, you understand the market products. You understand how the markets behave. You understand all the math. Also, of course, math is not to an extent what you have in CQF in FRM, but nevertheless, it's still a very good start and very much sufficient in many of the conditions. But let's say if you want to take a step ahead and want to really do something in terms of understanding these risk metrics at a deeper level, CQF can really help you there. And
Okay.
I feel CQF, the course itself is structured in a way where you have a lot of practical assignments. You go, the assignments look like you go code things. You they ask for you to build a war model, build something nowadays with a lot of AI and other things, you also get to code projects in AI. You build a trading model, algorithmic trading models. You
Okay.
also have a lot of other projects that you can take up based on your interests and what you want to do. There are some in market risk, some in credit risk, so
Okay.
multiple aspects like this. So that's where I think CQF helped me.
Okay. Okay. Now, when you look at the market risk space, anybody
Hmm.
new who want to join it, say without any
Hmm.
risk background as such, but he has done say FRM,
Okay.
what he
Hmm.
should do, okay, in terms of reading, in terms of understanding, in terms of some skill set, what he should do to
Hmm.
enter into this space.
Okay, so I can give you my own example. See, my background was never in finance. I have a mechanical engineering background. I come from engineering. Nevertheless, engineering did help me because of the math. Because math, when you go to serious risk management, the advanced mathematics, quantitative finance plays a very, very big role. So it's important from that angle. But still, to understand the financial markets, the products, initially have to spend a lot of time understanding these products, what are markets, a lot of things. Probably for a finance guy, they would have at least dealt in their college days most of these concepts, of course. So for your question, someone who has done FRM and what's the way to go forward, I would say the best thing to do is to develop the skills, right? So what are those skill sets that these companies are asking? So what I did in my case when I wanted to transition is I shortlisted some of those companies that I wish to work for.
Okay.
I went to their websites, looking for job opportunities, and the ones that I'm interested in, I would sit and study the job description that is listed out.
Okay.
And if you open and search for, let's say, 10 different banks or financial institutions,
Mm-hmm.
generally what you see is there are a common set of asks from all of these roles, right? If at all you're looking for similar roles, right? So I picked up few points like this, which are very common. Let's say most of them needed some programming skills, be it Python or R, or sometimes Excel, even VBA, and SQL and other things to pull the data in and code. So this was one of the common ask across. So I know now this is something that you really need to be prepared for, right? You
Okay.
cannot go to the interviewer and say, no, I am not that good at programming. Then that's already, if somebody comes with that experience, then obviously
Okay.
you will give weightage for that person, right? So it's best you first shortlist these set of skills that are asked across, and then you start applying. You will always have upper hand, you being an FRM already, which proves that you have sufficient knowledge in terms of risk metrics, in terms of market financial products. Now, what is that one thing that you need to prove is that, of course, you need to have clarity in your answers when questions are asked. And if you can also prove a bit of programming knowledge, you can start with doing your own projects. You can open Python in your own system, understand or probably code up how to simply calculate value at risk, for example, right? So these experiences is what you can, even though you've never given a chance to work in market risk, will prove that you are on the right path and you are someone who is willing to learn and execute. That's how I think is the right approach to
Or
take.
if you can recommend any online resource or material or any website that helped you to become good at market risk side. If you can share any
Mhm.
of them, that would be really helpful.
Okay, so one of the books that I read very initially is from John Hull. Yeah,
Okay.
John C. Hull. This book, I think, is a very good start for anyone
Hmm.
who wants to understand the space, especially the market products. And that's one. The second thing is, of course, you have a lot of content today on YouTube where you can search for how to, you can even directly search how to code up something in Python, for example, value at risk, right? So you have good number of content, and today with ChatGPT, I think you
Right.
are in a much better place than where I used to be back when I transitioned in 2019. So I think things are really good and a lot easier. You can ask any number of questions, get the answers without having, you go search all over the internet to find one single answer. So I think that's the right way.
So, in the marketer space, do you generally find engineers being there more in
Mhm.
those roles?
It depends, but I see at least a good number of people coming from math background,
Okay.
math physics background, especially when you move towards risk modeling. So you will need a good amount of advanced mathematics and understanding of how this mathematics work. Probability, statistics and probability theory, all the calculus stuff that we used to do, because most of these are in a way used in this modeling, especially when the portfolio gets complicated. You will need ways to kind of estimate certain things. All of this comes with some higher mathematics, of course, with a lot of assumptions, but still your understanding plays a key role. So you will see good 60-70% of people, not only engineering but more from math and physics background also, I would say.
Okay, interesting. And in terms of interviews, okay, you must be taking a lot of interviews of other students or other candidates who wish to join in. What are the two, three questions that you generally ask in interview to understand the caliber of that person?
So when some of the basic questions that we ask is, let's say, people do tell that I understand products. So one question that I commonly ask is, what happens to the bond value when the yields go down or up? And generally, people get a bit confused if they are not aware of this. It always interview questions are not really that complicated, but it's also simple things which people tend to not give attention to. And when that happens, then I also maybe sometimes ask, what do you think will happen to the credit risk of the bond? So generally the relationship is inverse, but people always mess up there. So you get to see such kind of questions. So yeah,
Okay.
those are the things
Okay.
that I
What is
generally
what is
consider.
the key essential skill to succeed in market risk? Two or three key skills.
So when it comes to skill sets, I would say as a risk manager, you should have, be it any risk manager, market or credit, you should have a really good attention to detail. You should be a detail oriented person, because it's always in the, if you observe and if you have that detail oriented look into some things, you will find out some things are not the way it is. Sometimes you will also see why certain risk is moving the way it is moving.
Okay.
And a lot of this observation also comes with your curiosity to understand the products in detail, and to kind of decipher this thing, you need to also sometimes go have a bit of coding skills, where you pull the data yourself, you try and compute something, or sometimes you manipulate the data. You really have to deal with a very large set of data here, so you should know how to manipulate the data and understand and bring in some kind of conclusion, and then you can make it uh, in a way that's viewable for human eye, because it's always the details are hidden there. So you, if you are that person, that's one great skill to have.
Okay.
Second, I would say is your willingness to learn, because market keeps evolving, new products keep coming. Although a lot hasn't changed in quant finance since invention of Black-Scholes model, it's mostly, you have your Black-Scholes model. On top of it, you keep changing one or the other variable within the model, and everyone wants their name after it. So simply they will change a particular variable, make it stochastic from something that is deterministic, or something that was assumed to be constant. In other words, the original Black-Scholes model assumed vol to be constant,
Okay.
where we all know volatility is something that keeps changing all the time. You cannot keep
Right.
volatility as constant factor when you are pricing an option. So now what is important is that you should also be willing to learn new things, put yourself through this learning curves as and when the new products come. Sometimes a new methodology of risk comes, you need to understand the math behind it, why certain things are modeled the way they are, and then it will be much easier for you to understand when the market moves why the risk moved. Because at the end of the day, as a risk manager, your main job is to explain someone or a senior management why did the risk move the way it moved,
Okay.
right? Unless you have the understanding of the product and the model, you would never be
Yeah.
able to explain it clearly, right?
Okay.
So I think these are the some key things that I would expect from a market risk manager.
And you were talking about programming. So any specific programming skill set like Python or R that you generally see people are using in market risk?
Mhm. So generally, my experience is people use both R and Python. It's also sometimes some companies are not flexible about this, because a lot of people will be doing only Python, or let's say only R. In that environment, you will have to probably stick to that, or else it's mostly you can do in both the languages. Maybe there are few advantages and disadvantages with sticking to either Python or with R, but in general, if you understand and code well in one language, I don't think it will take much time to learn the other one. It's mostly the syntax changes and the way, but logic remains same anyway. So
Okay.
that's
Okay.
that's how it works.
So
Mhm.
now, finally, I would request you to give one or two advices from your experience in the industry to the new generation or the new students who are joining in, uh, be ready to risk management basically.
Okay. See, this is something that I also keep receiving on LinkedIn. A lot of students who are just passed out, they always reach out to me asking for, some kind of referral sometimes, or at least they will, just ping me, with a common set of messages that they have, pasted to every single person out there on LinkedIn asking for referrals. So what I would suggest them is, first thing, be prepared, because of course competition is very intense in this space.
Right.
And with AI, you also see a lesser number of roles. A lot of roles are getting automated also. Wherever maybe you would need 10 people, probably you will see 6 now. Now, with this kind of scenario, lesser number of job openings is what you could see in the markets as well. Because back
Mm.
when I used to apply, there were a lot of roles in 19 and 20. But now, if you look at the number of roles, it has just drastically reduced. Say at least 50% of them are gone now. This is not to scare someone who is watching this, but also to understand. See, even with that kind of reduction in the roles, it's only one that you need, right? So if you are well
Yes.
prepared for that, you can always stand out in the crowd, take up exams. That shows your interest in it, right? So everyone wants to be in risk management, but what is that you are doing a bit differently than everyone else, right? So one, you being prepared with these exams, it will definitely increase your credibility. We can trust you with the products, with the product knowledge, or be it your financial markets knowledge. Now the second thing is to, like I said, take up your own projects when you are free, when you are when you can make some time to learn Python
Right.
or R, and try to compute these metrics, see what it looks like. Because when you come to an organization, it's at a much larger scale, given the portfolios, millions of instruments and different asset classes, equity, credit, interest rates, forex, and this will become so complicated. I mean, it's not possible to
Right.
compute in simply in within a Python or something, right? You really need a risk engines, that's what we call it, right? Hours together of calculations run, and then you get the results out for each day. That's how much complicated it can get. But to see that and experience that, you need to
Mm.
first at least do it on one single asset. Just take a simple stock and see if you can calculate value at risk. Can you do value at risk computation in that? Can you do a tail value at risk, which is simply a shortfall, right? So this is what I would say. So some people will not even have an understanding of what is the difference between value at risk and shortfall. They say that, I've seen examples of people who have passed FRM and still
Yeah.
they may not be able to properly differentiate what is var
Because it
and
is
tail
more
var,
more of
right?
theoretical in the exam also, right? And
Exactly. Yeah. So they tend to by heart these formulas, go to
yes.
exam, try to answer the questions and get the certification done. But sometimes they also tend to forget these basic things, right? So what is value at risk now? What is tail value at risk? If you can understand the differences, what is Monte Carlo simulations, right? History is a single path. Now, if you are computing a simple value at risk, all you need is just the historical returns, correct? And if you just want to, as a risk manager, what would I do? I will see, okay, this is just one single path that
Mhm.
the risk factor has taken. What would it look like, or a million simulations if I do, how differently this history would have repeated? And
Okay.
that's simply your Monte Carlo simulations. And if you try to take a tail of that, and if you take a particular confidence level and then you arrive at a certain number, that's your tail value at risk.
Right.
So you need to connect with concepts this way. Try and do one or two projects so that you are confident when you're answering. And when you're, again, a last point I would want to suggest for any newcomer is that if you're approaching a person for referral, be prepared. You show your preparedness there. If you are copy pasting some random message that you have prepared in very generic, I don't think that will always work, right? So you can come prepared. I would say I've even written a LinkedIn post on this, right? There are a lot of people that come to me, and not everyone are prepared. I see very few people are prepared for this. When I say preparation, what I mean is you can go to that person's company website, look for that one or two roles that you think you're eligible, and then you can come ask for this specific role. I've done so and so things, so I feel I am a fit for this role, could you please refer me? Generally, if you ask this way, there is very less denial there, right?
Yes.
You can see that person has put some efforts. He's not coming and randomly telling. I'm just, some people will just paste their resume and like, sir, this is my resume, can you please refer some roles to me? Like, why should I do? I mean, see, I'm not
No,
being arrogant here.
it's a valid point
From the
because
time perspective, yeah, you need to think that way, right? So
for
what's
you
the best way?
also,
You
no, for
choose.
you also, it is easy to take that CV and apply, pass it on to that particular
Exactly.
relevant role. So, and
Yeah.
nobody is responsible for your career. It is your responsibility to take care of it or take steps. So, very good, valid
Very
point.
true.
And also the point that you mentioned about the project, because when these kids or these new guys enter in interview, they have very less thing to talk about. When they have
Yeah.
projects, and I'm assuming that they will they have good understanding about the project, what they've done. So it
True.
becomes very
True.
easy for them, for the interviewer to ask question on those projects, and then it becomes easy. They have a talking point in the interview,
Yeah.
right?
Yeah. That's
So
very true. Yeah.
wonderful. I mean, Sagar, this conversation would really help a lot of young guys who are entering into this marketer space. People have a lot of query whether I should do FRM CFA, whether I should do. So in your case, you did FRM because you were very focused on risk management, and that too on market
True.
risk side. So FRM and CKF added a very good combination. So this conversation will really help those students to get good level of clarity with respect to market risk and what they can expect when they enter into market risk area.
Yeah.
So,
Yeah.
Sagar, wonderful, and thank you very much for taking out time and talking to us.
Thank you so much for inviting, and I had a great time. I hope this will be helpful for people who are watching it. Thank you.